How's it going? I'm Ryan, and today I'm going to go over the three trades I took on NQ. Started the day with some losses, brought it back with a win for overall a really nice day. We're on the PA account for Apex. We're up about 350 off of 2 trading days. So far decent, keeping the size pretty small so far. Let's get into the trades and kind of what I was looking at coming into the day. So to start, the way I was getting these levels is I'm using essentially the point of control for 8-hour time frame. So these are all bid-ask spread volume candles for 8 hours each, basically, daily sessions and overnight sessions. The yellow bar on these is representing the price at which the most volume was transacted during that 8 hours. So I get my levels. I look relative to where price is. As overnight in the pre-market, we had a huge drop in price. We had started to bounce back, so really I'm looking at price levels above and below for potential areas to target for resistance or support. So these levels are when I find like multiple volume profiles kind of aligning. So for example, like this one, you see this drop back here. That was the point of control that, as well as this like local top here. So that's an interesting area. It's one that I will watch. These zones are similar. We have like a lot of stacking point of controls here, and I'm looking for those areas to act as support or resistance and kind of have price gravitate towards them because there's liquidity in those areas. So that's what the gray zones are, and the blue bars are all from the 8-hour point of control. Next, we have this orange and yellow level, and we have another orange level down here. And what this is from the volume profile of the overnight and pre-market session. I've been doing a lot of back testing of this and just understanding how price in the daily session respects the previous overnight session's value area. So the yellow is the point of control. That is the price at which the most volume is transacted. And then it has a standard deviation to the upside and to the downside to create a value area low and a value area high. And that just encapsulates 70% total of the entire volume of the session. So what I've done is, and I'll turn that off, you can see that's calculated off of the overnight session where we had that big drop in the pre-market. I've found that price the following day respects these levels very well. And so when combined with things like volume and price action at these levels, you can use them as targets, as resistance or support. You can use it to gauge a daily bias if we're above or below that overnight value area. If we had broken above, that would be pretty bullish as we have a price imbalance to the upside. If we'd broken below, imbalance to the downside. If we're within it, we expect it to kind of stay within that range, or at least respect it before potentially breaking out. So I'll turn that off because it is a little distracting. Just use those levels anyways. Gotta reset the chart there. All right. So like I said, we had a massive sell-off coming into the day. I was actually kind of bullish because we had a bounce and then we were continuing higher. What I was looking for was a potential break of this pre-market high and then ride that up to this gray zone here. And that's a pretty big move. That's like 175 to 285. That's over 100 points. I wasn't necessarily looking to capture that entire move. That would obviously be the target runner, the runner, the price target profit target for the runner. But that happened pretty much in the first 5 minutes of the day. Price broke and ran all the way up to that level. So at this point, kind of what I wanted to see to the upside happened right off the bat, and I didn't get in. I didn't want to chase it. So then I was kind of reevaluating things, looking at, okay, if we break above this level, then I would want to see us go up to the value area high up here. That's about 300 to 400. That's another 100-point play because we had such wild price swings. We're not getting a lot of volatility, but you can use that to your advantage if you're able to capture some of that. So Let's take a closer look at the 5-minute. I do watch the 5-minute bid-ask spread as well, bid-ask volume. Not going to go in depth on that just yet, but what I saw was price breaking above, it held, and then we came down to retest. I took a long position here, and I'll go over a few reasons why this wasn't a good trade, and this was a losing trade. So I took 2 contracts, kind of sized down as I'm testing these strategies and getting used to how I'm playing these value areas. But what I wanted to see was a break above and a retest of this area, and then continuation up to that value area high. But what I was kind of neglecting was volume here. And you see we do get the break above. The price action is pretty weak and the volume is consistently declining. So that's not what you want to see. You want to see increasing volume on a breakout. You want to see some convincing price action as well. Then following on this, I always want to wait for a 5-minute confirmation. What I mean by that is I wait for a 5-minute candle to close with price action indicating, whatever I'm looking for, a bounce, a rejection, breakout. I always want to wait for that 5-minute candle to close. So had this candle come down and tested this area and then pulled way back up, that would be an indication of what I want to see. I want to see it test and hold that level with a 5-minute close. I didn't wait for that. I thought that, this kind of break and test here was good enough, but I should have realized that was the lowest volume that we had all day. So not a lot of push in that. So the idea was there, breaking above this level, we're going to move to the next level, which we ultimately do right afterwards. The idea was there, but the execution was lacking in some of the patience and paying attention to critical things like volume. So I want to use these value areas, but I also want to use price action. I also want to use volume. And with all 3 of those things kind of combined to form my trades. That was my first loss. 2 contracts got stopped out. I had an entry around 300. I was targeting high a day for the first trim. For the first target, I was targeting this value area high for the second. My stop loss was just below this wick. Got stopped out. The following trade I took was a short in here. I took it with a pretty tight stop and actually got stopped out on this move up. So I had about a 15-point stop. It moved up like 20 points or so and stopped me out. I quickly re-entered. So this was a loss, and then I re-entered and it turned into a win. And I took a short here because we had broken above. I realized what was happening with the volume. We had an increase in volume on the breakout to the downside. We retested, we got that weak action. That was the 5-minute trigger that I needed, right? We got the retest, we closed weak, entered on the following candle. Like I said, I did get stopped out, but I re-entered. And I re-entered with 5 contracts this time because I had 2 losses. I still wanted to take this trade, so I took it with 5 contracts, targeting a 30-point move, and then ultimately this point of control for my runner. I had 2 runners. I took 3 off at 30 points, which was I had an entry at 96, I think, or 97, somewhere in here. So 67, like just below the swing low, was my first target. Like I said, my second target was point of control. And my stop loss was above these wicks. So I had about a 30-point stop loss, 30-point take profit initially, and then just about a 50-point take profit on the second target. The reason why I target that point of control is that the price is attracted to these levels. These are levels of liquidity. The point of control, especially, is the level of the most liquidity from the overnight and pre-market session. So when price is moving in that direction, I expect price to kind of gravitate towards that. You see that we failed to break it on the first candle, broke and held on the second and third, moved up, pulled back pretty much directly to that point before making our way up to that value area high. This is my third and final trade, and I took a short on this candle here. Reason being, what am I expecting? I'm expecting price to kind of stay in this range. That value area high, there's going to be sellers there because it's kind of the height of where people found value, excuse me, as indicated by volume. It's the highest point at which people were transacting, and people were transacting up there selling generally. That's why it was the highest point and it didn't break past it. But we see price come up, we see it test it, this is that 5-minute confirmation candle I get, right? Price is weak, volume's weak. I get in risking just above this candle wick. 2 contracts, one for 30. The second was at the top of these wicks here for about 60. My entry was 96, so I entered right in here. It's a pretty good entry on this candle. And then just rode that down and took the profit. So even with the 2 initial losses, still had about a $300 profit on the day. You know, could have been a lot more patient with that first trade and avoided that loss. Second loss was, you know, just too tight of a stop. So it's moving. His price is moving big moves today, so a little bit harder to, you know, I feel that you have to kind of adjust risk to reward or stop loss and take profit based on the volatility of the day. If price is only moving 30 points, you're probably not going to have a 30-point stop loss and a 50-point take profit. But when price is swinging hundreds of points, as in today, you might have to bump that stop loss up to 30 points to capture a 60-point move for that 2-to-1 reward, as I did. So it's just the nature of it. I guess using price action as opposed to maybe risk to reward, like set numbers, and just adjust accordingly. But that's all I have for you today. Gonna try to get back. I fell off a little bit on these recaps, but gonna try to be more consistent as we do have the PA account. Really trying to dial things in. I'll make more videos going over my strategy as it's changed a little bit. Still using price action, still using volume, still using levels. It's just where these levels are derived from is a bit more contextual in that it's based all on volume and liquidity, as opposed to just strictly price action as it was before. So a little bit more context behind the levels that I'm using, but I'm still trading essentially the same way. With that, I thank you for watching this video. I do stream live every morning. I'll be out the last half of this week, but be back with regular schedule on next week. We'll stream tomorrow and make a video as well. Yeah, that's all I got. Hope you have a great day. Peace.